Alright, so this is a quick introduction video to Forex and the beginner's course, just on some key points that I think that I should explain before even beginning. So first, here we have the quotes. I went a bit deeper into what the quotes are and how to add quotes in the videos, but the general idea is that the quotes represent the different currencies of the different countries around the world. So when you're selecting a quote and you see one abbreviation in front of the other, for example, EUR USD, the one at the top, then that is simply saying you're trading the euro dollar against the US dollar. And the USD JPY is the US dollar versus the Japanese yen, and the GBP USD is the Great Britain pound versus the US dollar, and so on. So when trading, we are actually trading one country's currency for another without actually buying that currency. So we're trading the price of the currencies against each other. It's just very important side note. I think that you guys needed to know. So next we have why these currencies move in price. So you might have seen your local currency, for example, either appreciate or depreciate in value, either gain or lose value, and that changes the overall price. And the reason behind this is mostly due to the economy of the country, the banks and institutions trading that currency, like institutions like hedge funds. You have large prop firms or trading firms that also might heavily influence currency's price. But overall, you have indicators such as the news and generally how well the economy is doing will also heavily affect the price of a currency. Another key point I think is worth explaining is the red and blue line there on the screen. If you look on the screen, you can notice a red line with one price to the right of the screen and a blue line directly below it with another price. This is simply the spread, and spread is calculated based on your broker and the currency pair that you're trying to trade. So it's not something that you should worry about. You would want to find a broker with low spreads, like the broker I use, Hot Forex. That way, when you open a trade, for example, and let's say I wanted to sell, the trade would open at a negative cost, and that negative cost is calculated based on the spread. So a small spread is equal to a low negative cost, and it has a negative cost because if I open a sell, it will open where the blue line is, but the red line has to cross that blue line before I become profitable. So the distance from the red line to the blue line is what the negative will show. The red and blue line is just the spread. It's not something that you should worry about. It's just an indicator for you of where your trade will be open. If you want it to open a buy, it will be open at the red line, and the blue line needs to cross before you're profitable, and so on. And that happens in a really, really quick time, by the way. So now, please don't come into Forex looking to become an overnight millionaire, because you'll more than likely lose more money than you'll make with that mindset. Instead, try to focus on not losing and not risking too much per trade, and I promise you, you'll become consistently profitable in no time. And now, I'm not saying that it's impossible to become an overnight millionaire with Forex, But I am saying it requires a lot of practice with small trades before you can go on to raking in the big bucks. For example, when I started my Forex journey, it only took me 2 months to understand everything I needed to know in order to apply my own analysis to the charts and place a trade. And within my first 2 weeks of actually trading, I managed to turn $30 US into $150. And I know $150 isn't that much, but that 6,000 turned into $30,000 in my local currency. Plus, I was unemployed at the time, making actual money from my phone at anywhere, anytime, as long as I had an internet connection. It was life changing. And although I ended up blowing that account because of greed, I was still really, really happy because I felt like a heavy weight was lifted off my shoulders. Because I knew that I had developed the skills necessary to change my life for the better. I imagined if it was 300 US turned into 1500 US, or 3000 US turned into 15,000 US instead. All I had to do was replicate these same results on a larger account and I'd be set for life. And if you develop the skills necessary in order to be a profitable trader, you'll have financial freedom and be set for life too. And by the way, US 15,000 is $3 million in my local currency. So, not exactly overnight millionaire, but I'd settle for a millionaire in 2 weeks. So, moral of the story, take the time needed to develop the skills necessary to become consistently profitable. Practice. Practice, practice, practice. Backtest your strategy, backtest whatever it is that you've learned, even if it's simple, just support and resistance, or channels, or identifying chart patterns or candlestick formations, whichever one you choose to just learn bit by bit in time, you'll thank yourself. That's it.